Hi, my name is Megat Sheikh Sadi, and my group mates are Nur, Sofia, and Manisa. Welcome back to our channel! Today we'll be talking about annuity, a topic that we've already covered in our business maths lecture. But we are going to focus more towards Maybank's housing loan because we find that it's more relevant to the topic that we will be covering for today. We made a report about it based on Maybank's programs that was offered, as well as the company's terms and conditions and its interest rates that we will be covering for later. Alright, so to start off, I will be briefly explaining what we are going to talk about today. Right, so let's get into the topic today.
Because I've been dying to talk about it for
Assalamualaikum and hi, my name is Nur Sofia and I will be presenting about what is annuity. Okay, so annuity is actually a fixed periodic payment that you have to pay within the given time period. Okay, so for example, our group, we chose a bank that offers 342,000 house loan and it has to be completed within 35 years. So the bank will calculate for us what is the monthly payment that we have to pay them until we complete paying the house loan. So annuity is like that, okay? It gives us the advantage of paying by monthly rather than paying lump sum, because we are not that rich. That is why we have to pay by monthly. We're not rich unless we have a sugar daddy.
Daddy, how big is your ding dong?
Hi guys, I'm Manisa from group F10B and my group mates will be Megat and Nur Sofia. So today my group will be presenting about the annuity program, basically about the Maybank housing loan plan, which is the Maxi Home. And I in particular will be presenting about the company program description and the problem we have chosen. I'll be talking about the problem we have chosen today is about the newly married couple that wishes to buy a house for the family of 3. Miss Minaj wishes to buy a home in the city with a good skyline view and complete with 3 bedrooms, a kitchen, a living room and balcony as well. So technically, my group has suggested the Orion Skyview condominium, which is worth 342,000 in mortgage at a 2.25 interest rate for 30 years. This payment will be paid in a monthly payment series. Basically, in our report, we would have shown on how much Miss Minaj should pay monthly and the amount that needs to be settled after 30 years of payments.
Now I'm going to talk about applying annuity to your daily life, as I've already covered applying annuity to life in general, alright? Once you are signed up with Maybank Maxi Home program, which is a program that we chose to cover for our report, to create a virtual scenario to give a realistic view of how annuity works, we are given an advisory service to plan out the details of our loan program and set the terms and conditions as offered by Maybank to us. So, hear me out. As I said earlier, that Maybank will offer services for you to plan out your mortgage plans, right? Which sounds very convenient at first, but then there's also caps to this kind of programs. If we choose to buy a house with mortgage payment that we have to pay monthly, the bank offers a few benefits when it comes to the product or program offered. If we missed out a few payments due to circumstances, let's say you can't
afford, as I said before, it's very expensive, inflation, or you're sick, you're in an accident, you have to pay for your medical bill.
Circumstances to life.
We are given the benefit of repayment options which deals with our future needs and cases of emergencies. The loan is very flexible. It is higher than the average house income loan. So meaning that if you take out loans with other banks, you can't really index the prices based on your living standards or your lifestyle. It's already fixed. But when it comes to Maybank, you can revise that up to a certain limit. You can't just change I want to pay 950 per month. No. Not with your bro. And let's say a situation whereby once you've died and you obviously can't be paying the mortgage from your savings, right? Because you're already dead. So what the bank will do is that the bank will transfer the debt to your next of kin or your spouse. Basically anyone who is worthy of inheritance will be given the option to revise the mortgage payment as well as the salary income rate so that they can be able to pay for the house. Do you see where I'm going with this? Do you see where I'm actually going with this? No. You buy house means you don't susahkan me, okay? I don't want to pay for the stuff that you're buying. Okay, therefore, the terms and loans and overdrafts may be selected for combinations of both under the condition that the ratio of the price of the asset that you've purchased is at least worth 10,000 ringgit at a minimum rate for any facility types that you've chosen to purchase. If you buy a house that you want to rent out, or if you buy an office building that you want to also rent out or use for your business operations and whatnot, or you want to stay in that, whatever, fine, your choice, pro movement. Shut up! It has to be worth up to a minimum of 10,000 ringgit. So if you take out a loan of 100,000 grand, because you want to buy a fixed property asset, you want to buy renovations, right? However it is you want to spend the money, it has to be worth up to a minimum of 10,000 ringgit. But the money that you've bought actually doesn't cover renovations and maintenance of facilities. That's one of the few caps that I find when it comes to taking out a loan from Maybank. If you contribute a total asset worth of over 400,000 ringgit, we are given an additional death benefit.
Anyway, let's get on to the important business, and that's...
Once we are comfortable with the predicted risk and outcomes that we may differ with the plans, we are given options to change the sum of payments that has already been set for a shortened period of time, or if we are willing to pay higher than the average income that we are willing to pay. Up to you, you want to pay how much. Just don't susahkan everyone else.
Okay, so for the calculation part, as my friend has described it just now, Miss Minaj, she wants to find how much is her monthly payment as well as how much will be the remaining balance if she wants to do an early payment. So for this part, I will be showing you guys how to do the calculation part. Okay, so let's go!
Basically, Miss Minaj wishes to buy a home in the city with a good skyline view.
So to calculate what Miss Minaj wants, the first thing first, she wants the monthly payment, right? So make sure that you get the right formula. We will be using PV formula, and this is the formula given. Okay, and then you transfer all the data collected into the formula correctly. Okay, and make sure you don't do any carelessness in this. Okay, and you calculate it until you get the R. R means the monthly payment. So the monthly payment will be 1,177 ringgit 29 cents. So in Miss Minaj's case, she wants to do an early payment as early as 5 months earlier. So the first thing that we should do is we must find the N unpaid. So the N unpaid equals to N total to N paid, which is the 60 months. 60 months equals to 5 months. Okay. And again, we will be using the present value formula, and you transfer all the data collected into the formula, but make sure that you got the N right. Okay, it's not negative 420, it's negative 60. Okay, and you will get the remaining balance, which is the 66,749 ringgit and 84 cents. Okay, so Mitch Minaj problem is solved. Now we are going to see the amortization schedule. So for those who doesn't know what is amortization actually means spreading the amount of payments into periods of times until the payment is paid off, or in a simple term, until the payment is zeroized. Okay, so let's go. Okay, for the amortization schedule, what our group did first was listing every single data out to help us calculate the amortization schedule more easier. Okay, so since the years that took the loan to be paid off is 35 years and Miss Minaj do a monthly payment, so we did until the 420th month. Okay, let's see, 420th months. Okay, on the 420th month, as you know, 490th month, we already finished paying the loan. Okay, and as you can see, the balance on the 420th month becomes zero. That is what I meant by zeroized. Okay, the amortization schedule is meant to be a manual for us to calculate the loan until it becomes zeroized. So what it means when it becomes zeroized, it means that we had paid off the loan completely, so we don't have to pay anymore. Okay,
which is maximum. Blah blah blah. What did I start?
Faham.
Hi, we meet again. So I'm going to be summarizing what we've covered in our report thus far. In summary of what we covered, we find that annuity offered by Maybank's housing loan is efficient and budget friendly because of its flexibility to revise the housing plans as well as the mortgage rates that are being offered, so that buyers can plan out their purchases wisely and far more detailed than the average housing loan. Based on the scenario that we've created, as well as the schedule on adapting on the various formulas in the calculation methods in finding out how much we are going to pay for our annuity, we've also can conclude that it is far better to purchase a property or an asset with cash rather than a loan. Alright, so that we can minimize extra payments and costs, as most annuities issued are not included with maintenance fees as well as regular damages fees. Everything else will be out of our own pocket. We can conclude that it is far better for us to purchase a house in cash, okay? Because we cannot afford to take out a loan. Okay, do you know how hard it is to pay back a loan? It's very...
My money don't jiggle jiggle, it folds. I like to see you wiggle wiggle, for sure. It makes me wanna dribble dribble. You know, riding in my Fiat, you really have to see it. 6'2" in a compact, no slack. But luckily the seats go back. I got a knack to relax in my mind, sipping some red wine. Nice.